Hey guys, good morning. It's Sunday morning. This is Simon with TRADEnPERFORM Coaching. Doing a little trade review from the week. We're going to go do Thursday. We did Friday yesterday. If you look on the YouTube channel, you'll see the videos are there before. You'll stream on the screen down on the Twitter channel. You'll see it sitting there. If you'd like a pass to the room, a 5-day pass, please email me at tradeandperform@gmail.com. That's the extent of my fancy marketing. Let's jump into it. So the way we're going to treat this, so every day in the room, we do post support resistance levels. For example, this is from Friday where the levels were posted, and you'll see they're generally pretty solid, right? We tend to get responses out of the yellow zones are the most important areas, followed by the red line. So you would have expected a response out of this area first time in, you got it. You would have expected a response in this area. It failed. It backside tested. It rolled down to the anomaly or the yellow zone, rolled back up, and then we just missed this 11,037, which was the downside target before it bounced, and it's the last hour, so it didn't matter so much. So we do have areas where we're looking for larger time frames, where we're looking for support. For this exercise, we're going to look at it from both perspectives. We're going to look at it from a perspective of someone who's just wanted to short all day and someone who wanted to go long. So the first thing in our room, I do not trade, nor do I suggest you trade prior to 9 a.m. Why? It's not that it's completely untradeable. It's that the market's much faster. And what we're trying to gear our minds towards is consistency and repeatability. When the market's super fast, it forces you into super fast decisions. And we prefer to have an environment where we don't have to make such super fast decisions. So we skip the first half hour, pretty easy. Saves energy and sets us up well for the rest of the day. So here's 9 a.m. This is Thursday morning of this past week. And you can see Econ came out right away. And so what we're going to pretend first is we're going to look at the trader who went long all day long. Then we're going to look at the trader who went short all day long. And then we're going to do the same thing on ES, okay, with the same basic setup. And the basic setup is this. This is called a TnP Apex trade. It's highlighted by an algorithm that has a little blue triangle on it, okay? So all these algos, the purple bars indicative of an algo, the little green diamonds are indicative of an algo, the white squares and the green squares and the stars. So the only reason there's a differentiation in color is because if you make it all one color, it becomes monochrome in a sense, and it becomes very, very hard to um, see the algos as they're printing. So what I do in the room, there are more advanced trades, but I stick to the very basics in the room. And then for those who want more advanced trades, I do one-on-one coaching, or we discuss it over time in the room, right? So today, the trade that we're going to look at is when a little blue triangle forms in what's called the TnP Apex trade, right? Just drop a little line underneath it. And the way that works is so this bar forms, it takes about 2 or 3 bars to form. So you're never going to see that blue bar. It's the only algo you won't see form in real time, but it doesn't matter because what you're looking for is to see it get formed, then see price simply trade underneath it, whether it wicks or it actually closes underneath, doesn't really matter as long as it closes back in on one bar. And we're not going to use any discrimination. Like in this case, you can see it's clearly open drive lower, potential trend day down. We're going to ignore all the settings. We're not even going to look at whether we're at a support or resistance level. We're just going to take these trades blindly from 9 a.m. till 2 p.m. We're not even going to worry about the first half hour or the last hour. Okay, so here's trade one, and let's just go with the trade count, right? Oh, let's talk about risk for a second. Each of these bars carries about a 15 to 18 point risk. It averages out about 15 points per trade. So each time you get a trap back in, for example, and we have a range bar predictor that tells us where the price is. So usually we're limit on the trap back in. So if this trade, we're going to go with a couple of assumptions just for a conversation. We're going to assume you're trading the minis. One stop is $300 per contract. Your target is going to be 10, 15, 10, 20, 30, or some variation thereof as the market speeds up and slows down. But it's usually 10, 20, and 30. So first trade, let's just go right out of the gate. That's a loss, right? Now, we wouldn't have taken that because Econ just came out and you have this open drive lower, but it doesn't matter. Trade one's a failure, minus 15. So then we go to trade two right here. So you can see the close back in. And again, I'm going to show you all just so you can see the measure here. Let me make it really wide so it can measure out. And if you do the measure out, your entry on this trade would have been 11,560. Remember, you have about 15 points, but we have a higher than 50% win rate. It floats somewhere in the 70 to 80 percentile on this trade setup, and higher than that for the move to first target. So the best you could have done would have been 11,560 to 11,574, about 14 points. Again, your first scale is 10 points. That gets the majority of your risk off. So let's assume we got a 10-point scale on this, and we took a loss on the rest. Let's just call it a -5 there. Totally fine, no issue with that whatsoever, right? So I'm going by the hardest measure, and many of the members of the room simply go 10 points and done. And let me explain why that is. If you have let's say you just have a 60% win rate, you no longer need a 1-to-1 RR. 10 points in NQ is $200 a contract, and a lot of traders, if they can put together a string of 3 or 4 trades at $200 a contract, are quite happy with their day. Right, so we're going to call it 10, and it ended up being a slight loss on this. So lost 1, lost 2. That was a full loss, slight loss. Here's trade 3 right here. Again, we're assuming you don't have any ability to determine location, price action, trend in the market, bias, anything else. You're just taking them as they come along, right? So clearly on trade 3, your entry is at the close of this bar. Your entry is 11,548, and the best you could have done would have been 11,585. It's about 35 points per contract. That translates to about $700 a contract. So we're going to start with 2 losses and 1 winner. Obviously, the last winner would have more than covered your losses from the first 2 trades, and this is where we are, and it's still 9:11 a.m., right? Excuse me, let me erase that. Didn't mean to do that. There we go. So your next trade is going to line up right here. And I'm not going to draw out the P&L from each and every one of these because it'll take the review forever. But here's your entry at 11,554. The best you could have done on that extension, remember, we're looking at it the hard way first from the longs, and we're going to flip it short, would have been 11,570, 15 points. Again, that's about $300 a contract. So most people in the room would call that a win. They would get all their risk off at that particular point, and only the trailers would get stopped. Here comes trade number 3, and you can see trade number 3 would have been a home run, no matter how you measured it. Let me erase all the lines. Again, just following one basic principle of entry. There's more trades here, but I encourage everyone to take the same trade. Your entry's on the close right here at 11,542. It trapped back in to this apex back over here. Right, your initial move up, the best you could have done on the initial lift would have been about 20 points, $400 a contract. And then you'll see off to the right, it had a significant lift, right, and pushed all the way up from 542. The best you could have reasonably done would have been 646. So from 542 to 646 is 100 points or $2,000 a contract, right? Continuing in that line, again, not making any distinction between are we at resistance, not at resistance, support, not at support. Just looking at the trades. Here's your next trade is going to actually, let's be very specific. Your next trade, actually, see how this stopped out by a tick behind the wick? That's a valid entry. So you're going to lose 15 points on that long, and then your next trade is going to come right over here. Actually, you know what? I'm going to take it back, and this is one of the reasons why we pause sometimes. But if we look at this, and I do it exactly correctly, and again, it's already made a 100-point move. I'm unlikely to go long up here, but that's a different story. If we just go tick by tick, this is your first entry. That's a stop, but then this bar also, if I look at it exactly, this bar traps in, and then this bar traps in. So that would have been 2 stops on the same area. You'd had to take the third bar. And they were actually all valid entries. It just got choppy there, and that happens occasionally, which is why the RR needs to be in line. Once you get that initial risk off, you need to push for those trades, but you would have been -15, -15, and then this trade right here. And again, it usually doesn't go that way, but it certainly could have. And again, I thought the long side was difficult. 11,596. and that put you up to 11,656. So from 596 to 60, that's $1,200 a contract. So 15 and 15 would have ended up being minus 30 or $600 a contract. Excuse me, 15 and 15 is 30 points total. That's 600. And then 60 points potential, that's $1,200 on that trade. Again, we are not going through the day and taking every single trade that sets up. We are being somewhat discerning. And let me explain that. We're not trying to capture every single move, right? We are in the room, we're going, okay, like the market's already extended up over 200 points off the lows, right? So we're actually looking for turns the other way. We do actually have a bias in the room, long or short, and we're looking for an edge on that particular trade. I would never be going long here in this example, but I did say we'd just kind of go through all the trades as they set up, right? So here's your next trade. Again, this would have been a stop right here, your first entry back in. This would have been a stop, minus 15. Here you clearly got your 10 points, this next entry. It did not stop. Your stop goes 1 point below the bottom of that bar. It never stopped. And I'm going to ballpark it and say this is about a 50-point rotation up. So about $1,000. I'll come back and cover the shorts in a moment. And then as you'll see, as we roll down towards lunch here, there is no trade. You have to have an apex to trap back into. You could stretch all the way back over here, but I think even in this situation, it just didn't trap back into any of these apexes, and I prefer them to be closer if possible. So there's no trade there. And the first trade lines up. Hold on 1 second here. Let's see where the first trade would line up. Would be dun, 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 dun. I do not know if this trapped back in, so I'd have to go do the work. Again, I'm just highlighting all the longs. So there you go. So this is trap 1. Clearly you got your 10 points, which is my minimum for considering the trade successful. $200 a contract. Here's trap 2. Again, gave you your 10 points. I actually remember Daniel in the room took this trade right here, and he escaped with 10 points. But again, we have ways of reading the market, and we have other indicators where we have a bias one way or the other. If you keep going through this process, what you'd see is the trade sets up over and over again. This is into the last hour, so I'm not going to cover these trades at all because I discourage people from trading in the last hour. And so that was the long side story. Now, let's go look at it from the opposite end of the picture, and that's the short side, right? And I do think intraday, even in bear markets, long side trades when we're down and in the hole are easier than short-term trades, short-sided trades, particularly for those people who have a hard time easily flipping from one side to the other. But let's keep with the idea of the process, and we will go from there. So again, we're going to start at 9 a.m. with the idea of, hey, I'm looking for a short side trade. And your first trade is actually going to set up right off of this guy right here. That's your first trap right there. And it clearly paid you about 20 to 30 points, depending on how long you pressed that trade. That was trade 1, right? And then if you look over here on trade 2 on the short side, let's see, what did this trap back into here? And again, I'm generally do not encourage people to short near the lows. Longs into the hole, shorts up into the highs, right? When we get into location. This would have been considered a proper trap right here. And that would have been, let's see, where are we? Dun, dun, dun. This bar right here, you should count that as minus 15, right? Again, I don't think anyone would have been short in the room, but nonetheless, it did set up. And right here, you would see how this just simply did not stop out this power bar and simply did not close back in. There's no trade right there as it pushes back up to the right. And if this seems boring, it's exactly the way it is because you got to understand, let's say I'm looking for a short, right? Let's say I wanted to short. This idea is important, right? If there's no trap here, there's really just no trade. You're just going to sit there and you're just kind of waiting, right? And that's good. It keeps you from over trading. It keeps you from reading the market and then guessing where the PA is going to be. It's a specific entry It's a specific method and it repeats. Right? So your next entry is going to be right over here. Stops out. This is your entry, and I'm eyeballing it, but I'm going to say that's 30 to 40 points, $600 to $700, somewhere in that neighborhood per contract. Your next trade is going to come. Does this stop? I can't tell. And you'll notice I don't shy away from the stops, other than I'm looking, when we're in the room, I'm guiding the room towards where the more desirable locations are. Okay, that I'm going to count as a minus $300. We do have ways of increasing the odds on that trade, and I'm going to tell you right now, we'll let a little secret out. The way that we increase the odds on the trade is that you make sure you have a pink bar on the right side of the trap, right? So see how this over here had a pink bar right here before it trapped back in, and then again you'll see it stopped out and it had a pink bar on the left, and then it trapped back in. So the traps in general all work. They improve their odds considerably whenever there's a pink bar, or for the long side trades whenever there's a purple bar on the left side of the trap. It's not 100%, but it lowers, as we're working through that trade, it lowers the number of stops if you're not uber aggressive, and you can lay back and wait for the most prime of ideals. And you'll see right there that set up about a 70-point trade to the downside. And again, you'll see the traps over here where we're running back up. And this is the cool thing about this, right? So for those who are 50-60 traders, like if you use your 50-60 retrace, low to high, all right, and now you're looking for an apex stop. So you're just not blindly shorting into that 50-60, and you don't have to quote unquote guess, right? So these three here, none of them set up. But then you'll notice we come up to the right, trap behind it, close back in at the 50-60, and again, that generated about a 100-point flush to the downside, right? We're at 1130 now, and if you'll look, as we continue going down here, your next trap will be right here again. Beautiful roll to the downside. This is a very aggressive trap right here. You have to be really clear. And again, that's in the last hour, so I don't know anyone would have taken it. And again, this trade right here was in the last hour as well. But you can see how someone could easily sew together a 20 to 50 point day in NQ, which comes up to about, most members are shooting for $500 to $1,000 a day, whether they're trying to qualify an account through Top Step Trader or Apex, or larger traders who are trading their own accounts, right? $500 to $1,000 a day pays for a lot of meals, right? And pays a lot of bills. And the consistency that comes through, and I'm going to show you in just a second. I want to randomly show you why this is consistent. Let me do something here. Watch. I can go back randomly to anywhere in this market. Look, I can go 30 days ago. We'll just let this load really quick before I do the I'm going to do the ES model here really quick, okay? But if I go 30 days back, let this load really quick. Look, I'm just going to go back randomly. I obviously have no memory what this was. This is just going to be a Thursday morning thing, right? So I'm going to come in Thursday morning, and I'm on Central Time, so I'm going to wait till 9 o'clock to start trading. Don't remember what happened on this Thursday, right? Here's where I start trading, right? Right here. That's where I start trading. So this right here is my first trade of the day, right? See, it takes out the apex, closes back in. I have a range bar predictor that tells me where to put the trade. And you can see over there to the right, right? This is, it's about a 20 to 30 point trade right there, $400, $600 per contract. And then you can see it also trapped right here on the left. If I'm long side bias, or I think we're going to go back up, that's my next trade. That was 50 points to the upside. And then you'll see we took out this apex over here and trap back in with an algo. Again, I'm not going to go through and explain every algo here because we'd be here forever. That's why I'm focusing on the simplest potential trade setup. There's the trap, and technically you had to be really aggressive because technically it missed trapping back in by a tick. I would have taken that, but if you're going to be technically perfect, it didn't trap there. So we'll just keep moving on, but it was a beautiful rotation down. And what you'll see here, right, as you're looking, so notice this is a trap. Here's the reason why we scale a lot of our risk off at 10 points, right? See that trap? Lets you scale out. This is a stop right here, and there's no trade up here on top. There's just none, right? So just follow me. You had 2, 3 good trades, and you had a stop or two, which is going to happen. You're day trading, right? That's going to be part of the deal. If you still thought it was long, you would have been able to grab 10 points, maybe 15 out of that run up right there, and then it rolls over. Notice, here's where, look, I have no idea how this day went, but I want you to notice something. This is a situation where traders who want to trade the market and magically know how this turn comes, if it doesn't set up for me, I don't capture this, right? Because I'm trading the process instead of the market, right? I want to know exactly what I'm going to do, exactly what my stop is, and exactly what the entry is. It's a huge advantage, right? I don't have to re-guess the entire market every time. So watch when it's coming down to the right. I'll show you where my first trade would be. Here's my first long. That pink bar is my first long, right? I get my 10, 15 points off. Let's see if this trade trapped back in. It may not have. Oh, there's my second trade right there. That's my second long. And if I'm aggressive and I'm willing to shorten the hole, which I'm not a big fan of, right? I got 15 points there, and then obviously I get a beautiful 30 to 50 point run up over here to the long side. Here's my next trap short. Notice I'm not doing anything magical. I know there's going to be some stops in there. I know that some of my trades are just going to be scales and stopped where I get most of my risk off, but I don't get anything on the trailer. And then I know I'm going to have a few trades in there that the trailer is going to kick in, and it's just going to be a great trade, right? As I'm going through this day, right? So like you'll notice here, let's see if the trap kicked in. That trap did not kick in. You'll see it miss. So I just sit there and wait patiently, right? Here's my next long. That's a trap right there. Gave me a beautiful lift. And you'll also see that this trap back in to this apex to the left. See how this is, it's automatically guiding my eyes up and down the screen. I don't even know what was going on this day, right? I have no idea where support and resistance is. I'm just looking at the trade. This is a long, right? This is a long. Now, hopefully I have my chart and I have an idea of where support, resistance, where I want to trade and where I don't want to trade. But you'll notice the overwhelming times that these bars trap, right? I want to trade in such a way where I can manage my risk and still get paid. And you'll see this trapped all the way off. We stop this guy all the way over here, trap back in, purple bar, they're even better. And that's a beautiful lift that's worth about 50 points or $1,000 a contract. No trap, no trap. We're just going to sit up here. Oh, and then this is the end of the day. And I take it back. We wouldn't, you had to be super aggressive to trade this because it was the last hour of the day, right? So now let's go do ES really quick. 1 second here. And we're going to go back and do Thursday. This is my, oh, that's my big ES. Let's get a little ES. There we go. Let's erase all this good stuff. Okay, so same deal here, right? We're going to start today. That's Friday morning. Let's go do Thursday morning. We already did Friday yesterday. So remember, I'm with this mindset that if I get a trap, so in this video, right, if I see this open drive lower, econ just came out, I'm going to tell people, we'll just pause, let them work it through. But we're going to pretend like this is someone who can't pause. They're just going to take every trade. Now, ES has a little bit different rules. I'm trying to scale somewhere between 3 and 4 points to get my risk off. The stops vary by member. Some members use a 4-point stop, some use a 6-point stop. But I am either way trying to get a 3-point scale to reduce the cost of my trade. And I know I can have a very, very high odds of getting that 3 points almost every time, right? So my first trade in this particular case is going to occur right here. Excuse me. Spread this out. Again, I don't remember where the support resistance levels were, but you can see that's a close back in right there. And you can see the entry was roughly, let's call it 67. And the best you could have done on that trade would have been 76. So from 67 to 76, that represents a 10-point trade. And this is actually a trap back in, believe it or not. If you're looking for the continuation, this closes back into this apex right here. Your entry would have been roughly 71, and you can see it roll down considerably. The best you could have done on that extension would have been a 58. So 13 points were available to you there. No trap here. There is a trap right here, and this would be a good example of why, right? That's a trap. This would have been your entry right here at 64.75. And in this particular case, I don't even think you got 3 points, 64, 67.50. You missed it by like the hair of your chinny chin chin. But the reality is, if you got it exactly at 64.75, you did not get 3 points for your scale. You got a profitable move. You just didn't get 3 points, right? And you have to set some kind of line in the sand. But if you look here, let's assume the trader lost 6 here. So let's say you made 3 and 7, and then you lost. Let's just say you lost 6 here. So let's say your net for the day break even, unless you took the short, in which case you're way up. So if you took the long here, your entry would be in right here at 62, and the best you could have done on that initial push would have been all the way up to 87. It looks like maybe 90. Is that right? 87, let's call it, right? And then as you get up here, you'll see this is part of the reason why we're not guessing where the trade's coming in, right? We just see the apexes form. We see the apexes form, and you're relaxed. You're like, okay, so here's your next trade, right? That's your next entry. Clearly, you got better than 10 points on that. And then here comes your next trade again. Another 10 heading back the other direction, right? And then your next trade occurs. Let's see, did this stop out? It did. This is your next entry right here, and that was a beautiful payday to the downside. And then if you look, right, where's my next trade going to come from? Well, it would have to be on this bar getting stopped out right here. So that's my next long. You can see I got 5 points, 6 points maybe. And again, I'm rushing through this because I think it would be tedious to go all the way through. I do not know if this entered. That is a valid entry. Again, if you don't take your scale at 2 to 3 points, that stops. Again, no big deal for me. I know that some of my trades are going to stop, so I size appropriately to handle that situation. Nothing sets up long, and now we're into the last hour, so the day's over. And now I'm going to do the same exercise I did with NQ. I'm just going to go back randomly to some day in the past. Here, let's go back 45 days, let it load, and we'll go look 45 days ago to see what happened, or 40 days, wherever we end up. But it'll take a minute to load. While you're waiting, if you'd like to get a pass to the RAM, just email me at TRADEnPERFORM@gmail.com. Ask for a 5-day pass. Happy to chat with you if you're interested in joining the room over Skype or Slack or what have you. This is really for traders who are looking to improve their edge significantly. Most of the members in the room have been trading for quite a while and just have gotten tired of the boom-bust cycle. That's what we're seeking to fix by having a repetitive process that loads over and over and over again. So I'll just get to this part right here real quick. Let's go back. And this looks like it's a Friday. We'll just choose a Friday here. Oh, it looks like it's going to be a nasty trend day down too. We picked a hard day, but that's all right. A really hard day, apparently. Is that let's see what date this is. Friday the 26th, August 26th. So we're going to start off the day. This is where we'd start to look to be trading. And we have nothing so far. None of this traps, none of this sets up. Your first trade is actually going to be on an aggressive entry because it's inside these rails. But that's your first trap right there. It stops it out by a tick. Obviously, it paid very, very nicely to the downside. That was trade one. Notice that as we're getting ripped here, no longs are setting up, right? You're just not getting face ripped. And that's pretty normal. It's pretty rare for us to get re-triggered over and over again on a rip down. None of this traps over here. It just doesn't set up I'm looking at it closely. You've got to stop out those apexes. What you do end up with here, by the way, is a continuation trade on this trap right here. So this apex, come out, stop it out, close it back in for the roll down. Knowing myself, I probably would not have taken that. I would have been waiting for the long setups down here. And you can see I would have missed doing that. I'd missed quite a few short setups. You'll see the traps on trend days work really nicely in the direction of the trade, right? It always looks good when you already know it's a trend day, and we'll skip that because that was just straight up trend day down, and we're fine with that, right? Let's go into that following Monday. Let's get over to 9 a.m. By the way, for my European traders, works beautiful overnight. And here's 9 a.m. So let's go see what we're doing. 9 o'clock. And you're going to see your first trade's going to occur on this trap. Right there, obviously, that was just a gorgeous trade. Short side. And then you'll see as we come down, there's no trap here and there's no trap over here. There's just no long traps. So actually I want to talk about this. Sometimes people, even myself, can get flustered because you're like, well, look how much it bounced out of that area. It's all right. This is where I go back to telling members we're trading the process and not trading the market, right? Because the process is telling us which way to go. Again, you might have taken this really aggressive trade right here to the short side. Right here, you clearly got your 3 and 5 out of that on ES, but I'm not nuts about shorting all the way in the hole. And then over here, you'll see this is your next. So no trap to the left. This is your next trap. You clearly got paid. No trap back up to the upside. Here's your next ES trap. Clearly paid to the downside. And here's your next long, clearly paid to the upside. And is this trap? This is a definite maybe. Oh, no, it traps. All right. You got paid to the short side again. That did not set up to the long side. I'm trying to see if any of this traps so I don't skip it. Oh, and then we're at the end of the day. That's your whole day. So it's not nearly as fast as I'm going through and doing this, right? You have plenty of time to see it coming, anticipate it, set it up. And that's why I'm able to get continuity when I'm coaching people one-on-one. Once you have a method that works, like let me give you an example, right? Let me give you an example of how this would help someone. So let's say I'm coaching someone and they go, well, I was looking for the short and I thought the market was going to roll over here, right? So let's just say we were coming out of New York lunch. I thought we were going to roll to the downside. That's a pretty typical scenario for a trader, right? They go, oh, we were trending down. We came out and took out the swing. I thought we were going to go lower. So I shorted here. I didn't scale out. Then I got stopped, right? And then I thought I was going short again over here. And it stopped me out again. And then when I look at the end of the day, we close all the way down. That's a pretty typical thing that I'll hear when I'm talking to people. So traders who are frustrated, right? So I'll go, okay, well, here's how we fix that problem, right? We can short here. We can get our scale off here and leave a trailer. If the trailer stops, that's all right. You've taken either all the risk or most of the risk off. Then there's no trade here. It's not trapping into anything, right? So if a trader tells me I took the trade here, I can go immediately and go, well, what was the setup if you were taking the trade there? And gently nudge them over to where the profitable trade is, which is, well, okay, just wait till you're over here. This is a 1-bar entry. It's a trap back in, and you get a beautiful trade, right? And if you left your trailer, you'll see it wouldn't come all the way up against you. If you scaled off and you could have gotten trapped back in, let's see, this was an odd trap back in. It actually this bar gets trapped back in over here. That'd have been hard to take, right? So let's take the trader in that situation. Let's say it was the opposite. Simon, I entered the trade here like I was supposed to. I took my 5 and 10 points, but I didn't get the big roll down. Well, my answer to that would be, well, we're not going to capture every move. But if I took you all the way through this process, and you're taking 3 to 5 here, 3 to 5 here, 3 to 5 here. That's $150 to $250 per contract on each rip down, right? With controlled risk and the ability to come in the next day, right? So let's take that same trader, right? He's frustrated. Let's just go Tuesday. Here's that same trader on Tuesday. Okay, first let's see if he got stopped out. Not at 9 o'clock, he would not have gotten stopped out, right? And let's say that trader was uber bearish, right? Well, here's this trader's first trade, right? Here's his next trade, right? And as he scrolls to the right and he's looking for his trade, there's his third trade, right? He's going to stack that up over and over and over, day in, day out, on what he's looking for. And then I can address the same thing with the long trader, right? I could have had if you look at this rip up, the trader could have come and said, well, I was really looking for the long and I missed that apex. I'm really upset. And I would have gone like, okay, well, here's your next trade. You either got your 3 points of scale or you didn't in here, which is fine. But then if you came right back, let's say you lost. Say you lost 5 points there, right? Comes back in on the next trade. Look, this rips 10, 15, 20 points to the upside, right? Whether you're long or short. Again, you could come back with the same thing over here with this trader going, hey, look, I was looking for the short up here and I didn't get it. Okay, well, I can't make the algo work where it's going to work, but I can redirect him and go, okay, well, no problem. Why don't you look for the long right over here? Grab that long. Grab the long right over here. Either one, and capture these moves to the upside. You don't have to be locked and loaded. If you're a trader that's trading emotionally and you're always trying to read the market, odds are you're a boom bust trader, right? So the whole goal of the room is to move you from boom bust and repeating the process to going, I trade a process, it's repeatable, most days are profitable, some days are down, but I know exactly what I'm doing the next day and I know exactly what I'm looking for. And then once you're confident on your entry, now you can start to line up your entry with your locations, right, to get paid. It becomes a two-step process, but you can start focusing on what's negative in your trading. And then we move gently, especially if I'm coaching you one-on-one and I go, okay, whatever your issue is, first let's teach you what the profitable trade is. Then let's look at what you're actually doing. And then let's go look at your worst part of your game and the best part of your game. If we improve the worst part of your game and we hand you the best part of your game, the odds of you getting to being a profitable, consistent trader grow exponentially. Anyways, my name is Simon. I hope you all will choose to join the room again one more time, or at least come visit us and see what we offer. All right. It's a great team. TRADEnPERFORM@gmail.com. And I will talk to you all later. Have a great day, guys.